We have Mahesh Patil now joining us, Co-Chief Investment Officer at Aditya Birla Sun Life AMC. Good morning, Mahesh. Thanks a lot for joining us. Good morning. So, are you participating in this run, or are you just sitting tight on the cash?
No, I think we don't have much cash at this point in time, because as the cloud started to clear, as we got more clarity in terms of the election outlook, and also on the global front, we are seeing easing off a bit. We are seeing a risk-on rally. So we are pretty much invested. We were on a higher cash level at the beginning of the calendar year. But as we saw opportunity in the correction in the month of Jan and Feb, I think we have used that cash primarily to buy stocks which had beaten down, especially in the mid-cap, small-cap space. I think those have seen a good bounce in the last 1 month or so.
Okay. Well, Mahesh, let me start straight away with consumption, because so many people have come on the channel and said that things are slow.
Yes.
Today, for the first time, we heard Bata say something different. But yesterday, Dabur was downbeat.
Sure.
And the auto guys have been so downbeat, it's not funny. Escorts again said the same thing at the Credit Suisse conference.
Right.
So basically, first let me start with the auto space. Is this a time to buy the distress?
So I think the auto space, what happened was earlier in the during the festive season, there was a lot of expectations that you would see good sales. So a lot of production happened, and there was inventory buildup which was there in the system across four-wheelers, two-wheelers. And we're seeing that impact of that actually playing out. So that huge inventory buildup which has happened, and the sales were slightly weaker because that point in time we had tight liquidity conditions in the NBFC side. There were increase in costs also which was there. So the sales were not that great, and we're seeing the falling impact of that coming through in the auto space. Also, the retail demand also hasn't been as strong as one would have expected. So there is some slowdown in terms of high-ticket consumer discretionary buying, which is evident. I think the smaller ticket discretionary consumption is seeing a decent growth. So if you talked about Bata, for example, again, that comes into the smaller ticket discretionary, and the spending, which what we are seeing in terms of doing election time, a lot of money which flows into the system. And also the budget which has given kind of a cash transfer. That should help drive some of the small ticket discretionary consumption. Overall, in the FMCG sector, there has been a slight slowdown, but nothing much. It's around 1% or so slower. But that's on the back of good volume growth, what we see in the last 2 quarters.
No, actually, Lata's question was, the slowdown is known in the auto space, but will you buy into the distress?
You already
have because you have stocks like M&M in your portfolio.
Sure. I think, again, we don't think that the slowdown, what we're seeing in the auto space is structural. I think it is probably in the short next 3 months or 6 months, as the inventory clears down, I think you will see the demand growth kind of normalizing. And the stocks also have corrected quite a bit. So a lot of these stocks have corrected meaningfully. The valuations are looking reasonable. So I think in this correction, taking a longer term view, I think it will be a good time to look at some of these auto stocks, because I think the growth should normalize, say 6 months down the line.
Okay, I wanted to talk about flows.
Just 1 second.
Sorry.
So that the markets are bouncing back quite a bit, in fact, now, and just took support at like yesterday's low and then bounced back. The Nifty now at 11,485. So don't lose sight of that. And also the Bank Nifty is slightly underperforming today. It's perhaps some money moving into IT. HCL Tech, of course, being the top gainer. TCS is having a big run. Just pull out TCS as well. That's also a stock which is looking interesting. Infosys. That's the Nifty IT. We expected that yesterday. It's played out today. That's some catch-up.
Actually, the trend that you spoke is continuing today in terms of the currency weakening, probably because of dollar strength. But yeah, you're right that the change of guard and IT taking over is definitely happening today with HCL Tech blazing from the front. I want to ask you about IT stocks, Mahesh. But before that, what about flows itself? We've been reporting month after month that while equity is getting inflows, it is slowing down. Is March a different month?
Difficult to say, but at least what we have seen in this month, we have seen some inflows. People who were waiting on the fence at the early part when the markets were down, we have seen some inflows. SIP book is more or less flattish in terms of sequential growth. So I would say the flows are steadying out. I mean, after the fall, what we've seen in the first few months, I think they have kind of bottomed out. And we are not seeing, there are some outflows in the balanced fund category, because that's the trend what we have seen. But otherwise, I would say that the flows should marginally improve compared to the previous month.
So March would be better than February.
Looks like, yeah.
Okay, just to complete that consumption argument, I mean, you told us that, autos is a good space to perhaps buy into in this distress. What about some of these consumption names like Marico, Dabur, etc.? Because you do have Marico in your BSL 95 fund.
Sure.
Would you buy into the slowdown there as well?
So the other consumer staple space has been fairly steady. I mean, we don't see much of a change. There has been slight moderation in terms of growth. I think we've seen some of these companies report margin expansion earlier. I think that probably will not play out. So the growth rate in some of these names, which was slightly high. In Marico's case, I want to talk about that is more dependent on the copra prices, where you'll see a lot of volatility. But by and large, for the consumer staple space, the earnings growth should be fairly steady. We don't expect the same acceleration what we saw last year or this fiscal year, because some of the companies have reported very strong growth. But
this one only reported very
so I think that was
volume.
on the back of margin expansion. I think that will probably moderate down, okay, for most of the players. But I think they remain steady players. I think you will see, the whole stimulus, okay, which has been given would help spur consumption. Rural growth has been slow. It's slowly picking up, and I think that should probably increase going forward. So valuations in this space have been slightly on the higher side. So again, when these stocks correct, say around 5-10%, I think they offer a good entry point again to enter, because the outlook there remains fairly steady. And in this kind of a market where there is, while the outlook is looking good, but is bound to be volatile, they provide good stability to the portfolio if you enter at a right valuation.
Okay. Just look at Tech Mahindra's chart now. That's bouncing back quite a bit. Had seen some correction. Today is an IT day. Absolutely no doubt about it. In fact, the Bank Nifty is sulking today. It's the IT which has taken over. That's Tech Mahindra up about 1.5% right now. So looking quite good over there. Thoughts on IT, large cap and mid caps?
So IT, again, growth outlook there's not much of a change over there. But I'm seeing some kind of a downgrades to the IT earnings, okay, what they were earlier, because market is starting to factoring in now the rupee dollar rate. Earlier, the base assumption would be around 70 rupees to a dollar, okay, which might get cut down a bit. So overall growth in this sector is looking at next year kind of a high single-digit growth, earnings growth, which is okay, not too great. Last year, FY19 would be a fairly decent growth. So clearly there is a slowdown in at least earnings growth, perceived earnings growth, because margin pressures continue to be there. So the sector remains fairly okay. I'll still see the sector as a more defensive sector. Big returns in the sector probably would not be there. But again, downside also is limited over there. So I think again, if this sector corrects by 5-10%, again you see some kind of interest coming back into that space. Our view on rupee is that rupee should remain fairly range bound. We don't see, because we see good capital inflows coming in. So don't expect the rupee to depreciate too much. And dollar strength also is kind of peaked out. And again, with global growth concerns going down, currently, while the order inflow for the IT companies look fairly strong, I think it could probably start impacting somewhere down the line. So we are neutralish or slightly underweight on the IT sector at this point in time.
Okay. Mahesh, I want to talk about what you have plentifully. And I think, I know our team has been helpfully bringing up the stocks that you own. You own so many banks, SBI, HDFC Bank, ICICI Bank among your stocks, and also, of course, HDFC, the mortgage company. Will you expand the list and now go into, PSU banks, other non-SBI public sector banks, or even the mid-cap, the RBLs, Federals? After all, HDFC Bank and Kotak Bank is everyone's bank.
Sure. No, again, I think the investable universe, okay, in the banking space has clearly increased, as we've seen a lot of the corporate banks also being cases where one can invest into. Obviously, the portfolio choices will depend on the objective of the fund, right? In a larger cap fund, you will see the larger cap plays. In the mid cap fund, you will see some of the mid cap names. But I think our breadth in the banking space has clearly improved. Having said that, on the PSU banks, I think we're still focusing on the larger names, not really playing the smaller PSU banks. We still prefer some of the smaller mid-cap private banks over the PSU banks over the medium to longer term perspective.
Okay, well, Mahesh, we will leave it at that. Thank you so much for joining us on the show. For now, the stock of the moment is HCL Tech. Bank of America Merrill Lynch has upgraded that stock to a buy from a neutral, and they've hiked the target price to 1250 from 1060 earlier. That's really the big nifty gainer right now, up about 3% odd.